I have to go and look for somebody, or it's not as automatic or as quick as it would have been if it was public, that is open to everybody. Some people send us messages on Money Africa, Tosin, I want to buy a GT Bank share. Who is selling? I say, you don't have to wait for anybody to sell. That is the beautiful thing of a public market, that is a stock market. You don't have to go and be looking for a buyer yourself. You just go onto the system and tell them you are selling, and they will find you a buyer. That is the beautiful thing about a public market. Of course, there are some companies that struggle with buy and sell, but they're in the minority. For majority of them, there's buyer and there's seller. And these brothers and sisters and watchers is what we call liquidity. A liquid company means that you can easily sell it or you can easily buy it. Liquidity means how quickly can you turn something into cash? How quickly can you turn it into cash? And that's why they always say that a real estate is not that liquid, because you have to find buyer, you have to find real estate, then you have lawyer. It will not, at least it will take you a while. You understand? Some houses sell faster than the others. But my point, or like of a stock market, like if you can do a sale now, literally in 1 hour or in 2 hours, you can actually get it sold. That is how fast you can turn your asset into cash. Boom. All right, guys, let me know if you're following. If you have any question on this before I go further, let's see. Okay, I think everybody's fine. Okay, great. Everybody's fine. I'm just trying to check to make sure that we're all on the same page. Guys, remember that just keep me updated in the chat box if you need to ask me questions or if things are not going on well or anything. All right, great. I think everybody's following. The next one now is that we're talking about the misconceptions of the stock market. What is a misconception? Somebody is saying that the webinar time is just counting and there's no audio. Okay, you guys can hear me. Okay, great. What is a misconception? We're talking about the misconception of the stock market. The number one myth that people always say is that the stock market is very risky. Now, remember that very is a very strong word. Very is a very, very strong word. You should not feel that way. It's not true. And I will show you charts. I won't lie to you. Now, remember that the stock market has levels. You have New York Stock Exchange. You have the NASDAQ. You have the Nigerian Stock Exchange. You have the Ghana Stock Exchange. You have the Rwanda Stock Exchange. Stock market has levels. I remember, I think it was about 5 years ago or so, I traveled to Rwanda, and then, I'm not kidding you guys, on the Rwanda Stock Exchange, there were only 3 companies listed. I wish I was joking. I wish I was joking. Things might have changed now. I wish I was joking. I was very shocked. Now, this markets have levels, right? So the fact that you're saying that a stock market is very risky is because there is lack of knowledge. So the misconception of the stock market is that it's very risky. And that's a myth, because it is very risky when you do not understand. I'll show you why. I'll show you why I'd say otherwise, right? I'll show you why I'll say otherwise. I'm just trying to make sure that everybody's fine. Sorry, I'm just saying so. Okay, let me just ignore the comment box and just carry on. Okay, I'll show you why I say otherwise. Okay, the next myth is that investing in stocks is equated to gambling. This reason causes many people to shy away from the stock market. What is gambling? Gambling means when you are betting on something that has no underlying assets, right? Or when you are betting on something you do not understand. So that's why if you were to go to a horse betting, you are hoping that horse A will win horse B. Now you're betting, right? There's no underlying asset. There's nothing behind it, just like a bet. Or like of a stock market, there are real things behind it. Like now look at Amazon. Amazon has advertising revenue. Amazon has they are selling and buying an online retail store. They have all this different revenue. It's a real company. It's tangible. You can hold it, right? It's a real company. There's a real asset backing it. So it's not a gamble if there's a real asset backing it. Now, another thing you also need to learn about is how it actually works. How is revenue growing? What is happening with the income? What is happening with its expenses and all of that? Once you have the knowledge, it takes away this myth that you're actually gambling on the stock market, because there's a real company behind those names. Number two, you can actually understand what exactly that company is doing and how they are growing. Of course, there are companies that have failed. But compared to the ones that have succeeded, these ones that have succeeded are actually higher, and I'll show you numbers to prove it. Myth number three, the stock market is an exclusive club for brokers. Brokers are people that trade, and the rich people. That's not true. Gone are those days. Now, for a lot of people with as little as 5,000 naira, you can actually start investing in the stock market. They started creating it for retail investors. Retail investors are people like you and I. You have lower capital. You want to be able to buy stock now. So let's say you have 10K. You're thinking, should I buy 10,000 naira dress or should I buy a share? It's possible. Companies now allow you to use little amounts of money to buy shares, right? So it is now possible. Now, a lot of people say, Tosin, Tesla is $400. I don't have up to $400. I only have $50. There's something called fractional shares. A fractional share, again, just like the bag of rice I spoke about, is how many people can own part of one share, right? So somebody can bring $5, and that person brings $20, and that person brings $100. They will join everything together until it's complete $400, and they can buy one Tesla. That is how fractional investing works. So gone are those days, and those are myths that it's only for exclusive club, for brokers and rich people. The next one is that the fallen angels will go back up. Where am I going? Many people buy shares just because the share price has dropped, and we shouldn't do that. It's a myth, right? The fallen angels will not always go back up. You need to ask yourself, why do they fall? Why did they fall? Now, if a company crashed because they had fundamental problems, you have no business buying into that shit. Let's say, for instance, BlackBerry, for instance, they had problems, their technology were not up to date anymore, they were struggling with the market, they were losing market share and all of that. Now, if that share dips and I say, it's now cheaper, I'm not going to go and buy just because the price dropped, that is not a good enough reason. You need to ask, what is the fundamental analysis of this company? Did the reason why it fell, was it something outside of their control, right? Was it something because the value of the company in itself is depreciating? Is that not all shares that fall in share price will go back up. Not all shares that fall in share price will go back up. We have to look at other elements. The next one is that stocks that go up must come down. So many people are like, oh my gosh, this share is now $400. It's going to go down. Story. Many people have a price wait point, that they're waiting for a particular share and they're hoping that it comes there, but it doesn't happen, right? There's no guarantee that the share price is going to go back up. There's no guarantee that the share price that is up is going to come down, right? So let's say, again, I'm going to use Tesla, for example. After the whole share split, Tesla has adjusted its prices, is now $400. A lot of people say, I'm going to wait for Tesla to go to $150. There's no guarantee that it's going to go to $150. Some shares don't. They might just go up, maybe come down slightly, go up, maybe come down slightly, go up, maybe come down. While you are waiting, the share price has gone to $1,000, right? So that's a myth as well, that every stock that go up will come down. That's unnecessary. Remember that down is relative. A stock can go down by 10%, another one can go down by 20%. But many people are like waiting for it to like crash, like maybe come down by 80%. Sweetheart, brother, sister, it might not happen. So there's a myth that it will not happen. The last myth is that a little knowledge is better than none. That's not true. Now, some people might have slight knowledge of the stock market. People will just buy and sell. Or, somebody lost money. Or, a share can fall in share price. Now, the problem is because that person has limited knowledge, it might change your entire view, because if you don't understand other things, like how fundamental analysis, or somebody might have the knowledge that buy low, sell high. It's a normal phrase in trading. Everybody says it: buy low, sell high, buy low, sell high. Now, because you have that little knowledge alone, you're not going to buy low a share that is already dead. You won't make your money back. So do you see why that myth is actually a myth? So these are the different 6 myths that actually goes around in the stock market, and that is why we keep teaching about it, and we want people to have knowledge. Little knowledge is better. Little knowledge is not better than none. You should have the right knowledge. It's better for you to have the right knowledge so you don't make mistakes. All right, great. So why do people invest? People invest for 2 primary reasons. They want dividend and they want capital appreciation. Let's be honest, guys. The stock market is not a charity. People are not buying it because, oh my gosh, it feels pretty. It's an investment, and that's just really what it is. So it's not a charity. It's not a loyalty card. It is an investment. And when people purchase it, they are purchasing it for those reasons. So what is a dividend? A dividend is a return on your investment. So now let me tell you, this is how the income statement of a company works. For instance, I want you to stay with me. Let's think of an example. Who should we use? Let's use Walmart. So this is Walmart's income statement. On the top line, they have revenue. What is revenue? Things that they sell. So maybe they're selling shoes, bag, pants, mask, all these kind of things. Top line, revenue. The next one they have is like cost of sales. What is cost of sales? All the things that they use, the cost of the goods that they bought. So maybe they went to go and order the goods from China or all these other things. That's like their cost of goods. Then they will have gross profit. Please stay with me. Don't go away. They'll have gross profit, right? And they'll have your different expenses, employee expenses, depreciation, all these other things, tax, book. When they get your final last number, the profit after tax, boom, now they can pay dividend. Companies pay dividend from their profit after tax, and they pay dividend. So that is why a lot of people actually invest in companies, because they want dividend. What is the benefit of having dividend? Cash flow, right? So I know that at this time of the year, I know that I'll be getting paid my own dividend. Let me use Nigeria, for example. Financial institutions in Nigeria, for example, pay dividend twice a year. So they have the interim dividend, which is like the first one at the beginning. Then they have the final dividend, which is the second one. It is done twice every year. So you have the final dividend and you have the interim dividend. That is how the Nigerian financial institutions, so you're talking about Zenith, GTB, all these other guys, that's what they do, right? Many people do it just because of what? Cash flow. They want something to be bringing home, right? Now, some companies pay dividends, some do not. The companies that usually pay dividend, companies that are nice and fat. So you see companies like Apple. Do you know how much Apple has in cash? You don't want to know. Billions of dollars. That's how much they have sitting down in their bank account, sitting pretty as cash. Yes. When we did the math the other time, what they have sitting down as cash is more than Nigeria's budget. Yes, that's how rich Apple is. Anyhow, I digress. My point is this. For anybody to pay you dividend, they're relatively healthy, right? They are doing well. So usually you're seeing your blue chip companies, or companies that are like doing well. But when you see other companies that are in their growth stage, instead of them giving their profit back to shareholders, they'll rather take that profit and put it back into the company so that the company can do, so the company can grow, right? So they're entering new markets, they're building more workforce, they're pushing more units, they're getting more users, they're conquering new territories. They need that capital desperately because they're a growing company. Apple is not a growing company. It's a blue chip. It's there. Coca-Cola is not a growing company. It's a blue chip. It's there. So there are different phases where different companies are, and then that will determine how they actually pay their dividends. So Coca-Cola is known to be a dividend king. They've been paying dividends since over 100 years, right? And then, so there's dividend kings, and there are all these other different players that actually pay dividend, and that's how it works. Now, I want you to stay with me. The primary reason why people invest in shares, we have two reasons. We have dividend. We have what? We have capital appreciation. I'll be touching on capital appreciation, still on dividend. Now, remember that a company with stable earnings, that is, that are paying dividend, you want to be able to compare. So you're saying to yourself, a quick example. In Nigeria, Zenith Bank and GTB have been paying the same amount of dividend for the past about 3 years or so, right? So let's say they both pay their shareholders 2 naira 50 kobo every year, right? I want to be able to know how well my dividend is performing compared to other companies. If I say that, GTB or Zenith, or they paid me 2 naira 50 kobo, and another company paid their people 10 naira, it will look like I was cheated because these other people got more money. That's not how you do it. There's a formula for doing that. It's called a dividend yield. A dividend yield basically takes the price of the dividend, and takes the share price underneath, and then gets a percentage. So I can compare. So if we take, for instance, 2 naira 50 kobo by Zenith, and let's say the share price of Zenith is 20 naira. Guys, remember that this is an example, right? 1 divided by 8 is about 16%. That means that, oh my gosh, that's about 16% in dividend yield. Remember, this is an example. That's about 16% in dividend. I can then compare it to what the dividend yield is in Nestle, what the dividend yield is in Dangote Cement, what the dividend yield is in MTN. I can compare it to all the different companies instead of just saying, 2 naira 50 kobo compared to others. Now, I don't want to go too much into it, but just shows you why people invest in dividend, especially older people, right? So, they've made money, they've labored, they've worked for like 30 years, they've really labored. So they have their money in this thing, and they're literally just with their dividend is like their own rent, right? So it's like their own real estate, and they're just waiting for the cash to come so they can offload it and do other things with it. I know people that, not that I know, there are people on the system that actually have investments of over like 100 million or so. So when that 16% drops, or when that 15% drops, I mean, it's a heavy ticket, it's a heavy amount of money. Yeah, how are you guys enjoying the class? Let me get a feel. Let me know. I've not come to the chat box. How are we doing? Okay, so all right, great. So everybody's doing okay. All right, great. So let's go. The next reason is a capital appreciation. What is a capital appreciation? A capital appreciation basically means that you bought a share at 5 naira, you sold it at 10 naira, you bought a share at $5, you sold it at $10. That is basically how capital appreciation works. It is an increase in the share price. There could also be capital depreciation, meaning that you bought it at 5 naira, it's now going for 1 naira. If you ask a lot of Nigerians that bought shares like 10 years ago, they will tell you those stories of how, oh, I bought let's see what company is coming to mind. Oh, I know there's a company that I bought Owando. I bought Owando at like 15 naira. Now Owando is worth less than 5 naira. You hear all those stories, right? That is a capital depreciation. It's a loss of capital. Capital appreciation is a growth in capital. So it's a growth in the share of the price itself. So that's basically how capital appreciation works. And that's why a lot of people invest in the stock market. All right, so that's basically how capital appreciation works, guys. Let's go to the next thing. Now, let's take a journey. I want us to take a journey to the different stock market and basically see how it works. Now, do you know that the New York Stock Exchange has been around for a long time, like 1792? It was started by 24 brokers. Guess what happened? They were actually standing under a tree. After this class, go and check on Google. They were standing under a tree and they came together and they said that they were going to start the New York Stock Exchange. So the New York Stock Exchange is actually not far from the tree that they were standing on. I don't know if they've cut the tree away now, but this conversation happened underneath a tree by 24 different stockbrokers, and they started the New York Stock Exchange. Now, remember when I told you that many people say that investing in the stock market is a risk? Let me show you why. Now, if you look at this graph here, right? If you look at this graph here, right? You can see how this graph is working. But guess what is happening here? It is going what? Up steadily. So there are times it fell. That was around what? In 2008, where the market crashed. But guess what? It jumped back. The New York Stock Exchange recovered from the 2008 crisis. The Nigerian Stock Exchange never recovered. It still has not recovered from the 2008 crisis. But look at the New York Stock Exchange. It went down in 2008. Remember that time that there was a global turmoil? Then what? It went back up. It bounced back. It made up. It recouped for the lost time. So if you look at the stock market on average, there's a continuous growth, albeit a decline. There's a continuous growth. And that, guys, is the reason as to how the stock market works. And that's why when people keep saying that the stock market is very risky, if you look at it on average, what is happening? On average, it's actually growing. Now, let's look at the NASDAQ. NASDAQ started in 1971. Unlike of the New York Stock Exchange, that people go and take pictures, or they go and tour, or they go and look at all those things. Basically, if you look at the New York Stock Exchange and how they tour and how they do and how people tour, NASDAQ does not have a physical location. It is where a lot of the tech companies are listed, like you have Facebook, Apple. So NASDAQ is like very techy. If you look at the graph, you can also see it here, that in 2000, you can see how it grew towards the 2000. You remember how they always talk about the dot-com bubble? Yes, that was what happened. So from 1996 all the way to 2000, there was a bubble in the air. Shares, companies were just getting highly valued. They were surging in price, and then the market crashed. So the market crashed eventually, and then it came down, right? So, and then you can see that it actually went back home and it started to climb up again. So basically, that is how the NASDAQ market has actually performed, and that is how it has gotten its own return. Great. The next one is the Nigerian stock market. The Nigerian Stock Exchange was founded as the Lagos Stock Exchange. That was what it was then. Then they changed the name. It was founded in 1960. So just like Nigeria, just like Nigeria's independence, the Nigerian Stock Exchange was founded just before it then. So the Nigerian Stock Exchange is also approximately 60 years old. It's just as old as Nigeria itself. Now look at the Nigerian Stock Exchange All-Share Index, right? You can see here that in 2008, you can see the surge that it went up, and then what happened? It went down. But unlike of the New York Stock Exchange and the NASDAQ, it never came back up, right? It's like you can see that it still has not recovered. So we are still haven't recovered. We've not gone back to the days before 2008. Remember what happened then in 2008? The market was bloated. The numbers were exaggerated and all of that, but still the market has not recovered. So basically just taking you on the journey, because we need to understand this thing. And I know that whenever I talk about the stock market, it sounds like so exciting and it sounds so interesting, but the purpose is this. I don't think you should be putting your money into something you do not understand. You should be able to tell the story so beautifully. You should be able to say, oh, this is what happens. That is what happens. This is when it started. You know, all this little story, it makes it enjoyable. I feel like It's a lifestyle. It's a journey. So why don't you understand what it entails, and then we'll be able to tell a better story and actually enjoy it. All right, guys. Next one is, what is an index? So whenever people want to start investing, like, oh, should I buy one share or should I buy an index? And we always say to people, index is a good place to start as investors. Well, let's look at how it works, right? So we have the index basically tracks the movement. They take a whole bunch of share prices and they transform them into one clean number, and they measure the performance of a basket of securities. Let me break it down. I love to use this example, and I use it all the time. How many people here has taken a cocktail? Now, remember that cocktail is not just alcohol. So you have non-alcoholic cocktail and you have alcoholic cocktail. What goes into a cocktail? I was out with my friend last night and I had a pineapple mojito. It was my first time. I didn't even know that was those. I didn't know that. I thought mojitos is always a mint kind of drink. I didn't know that they had a pineapple flavor. Anyhow, in that my drink, they put a pineapple syrup, they put mint, put ice cube, they put some tonic, they put another soft drink, maybe it's a Sprite. They shall put so many things that made up my what? That made up my pineapple mojito cocktail. That is what an index is. It is a cocktail. It has different things going into it. So let's look at, for example, there's something called an S&P 500 index. It tracks the 500 largest companies on the exchange. The 500 largest company on the exchange. That's what it tracks, right? Great. So the 500 largest company in the US, that is what the S&P 500 tracks. It puts them in it and mashes it together and creates that cocktail. Now the cocktail is a new drink. I cannot go and start saying, oh no, I want only my mint. Or how much is the mint doing? The mint is not there anymore. It's now a new drink, and that new drink is what gets tracked. Are we together? All the different components that comes together and mashes it together is there's a new drink that actually now gets tracked. So now that index is a new number. It depends. So that you have your VOO index, you have your AKRR index. So what makes up an index is what is inside it. So let's say S&P 500 index actually tracks 500 of the largest companies in the US. Let's say the Dow tracks the blue chips companies in the US. Let's say the ARKK tracks the growth companies in the US. So whenever you want to invest in an index, you need to ask, what does it entail? What are the companies inside it? It's like a tea, like a cup of coffee. You want to know what kind of coffee, what was the sugar, what was the milk, what was all the things that went into it to create that cup of coffee. And that exactly is how an index works. So if you understand it from that angle, from that perspective, it changes your entire outlook about it. Great. So I think basically we've spoken about how the index market works. So in Nigeria, we also have the index. There's something called the NSE All-Share Index. Basically, the NSE All-Share Index tracks the Nigerian stocks, all of them, right? So every stock in Nigeria tracks it. Now, the beautiful thing about our index is that it's like a benchmark. So how is it like a benchmark? So for instance, let me use rough examples. Last week, the Nigerian Stock Exchange gained 2.4% thereabout. You're saying, is this large? Is this small? How are you trying to know? It gives you a benchmark as to how the entire stock market performed, right? So it just shows you an average of how all of them perform. So you can compare it. So now you can compare how Dangote Cement performed to the average. You can compare how MTN performed to the average. You can compare how, who else? Airtel performed to the average. You can compare how, who else is big on the market? So we've said MTN, we said Dangote Cement, we said Airtel, you know, GTB, Zenith, you can compare it to the average. So that all-share index is like the average. It tracks things on average, and then it's used as a benchmark, right? Let me use a good example that a lot of Nigerians will be familiar with. If there is no light and you're going home, we all have that one house we used to check if there's electricity or not. So because those people are always sitting on their chair, it could be a hotel that has 24/7 electricity. You know that if that house has light, every other person, that house is your benchmark, right? That is basically what a benchmark does. A benchmark is something you use to compare to how good or how poorly others are performing, because it's like a marker. All right, guys, so I think we've spoken a lot about indexes and how indexes work. The next thing we want to talk about is, if I do not buy shares, what else can I buy? Aside from stock, one can buy an exchange traded fund, which we already spoke about. You have the WU, you have the S&P 500 index, you have other things. You can also invest in a mutual fund. What is a mutual fund? A mutual fund, like the name explains, is when different people come together to put money together to invest in something. Now, many people, whenever they hear mutual fund, they think about a money market mutual fund. They think about, it's a money market mutual. A mutual fund means different people coming together, invest in one thing, right? So whatever they invest in determines the kind of a mutual fund it is. So for instance, I love to say that it actually sounds like rice. If you put rice in tomato sauce, it becomes jollof rice. If you put rice in coconut sauce, it becomes coconut rice. If you put rice in vegetable, green corn, green pea, vegetable serere, it becomes fried rice. Exactly. Remember what is happening here. Your rice is like when everybody has put money together. And whenever you throw that rice in something, whatever you throw it in determines the kind of mutual fund it is. So for instance, a money market mutual fund means that you're investing in treasury bills, in government bonds, right? That is how it explains it. That is a money market mutual fund, because you're taking that mutual fund and you're dropping it inside treasury bills, government bonds, and fixed income. So it's a money market mutual fund. If you take that same mutual fund and you drop it into equities, it's what? An equity mutual fund. So whatever you drop the fund in determines what it is called. Now, the beautiful thing about a mutual fund is that it is regulated. So in Nigeria, it's regulated by the Security Exchange Commissions. Other markets have their own regulators, and that's one of the key things about mutual funds. So it is possible for people to pool money together, but if it is not registered by a fund, you cannot call it that same name. Are we together? That's basically how it works. Last but not the least is the Euro bond. So we've been talking a lot about Euro bond. We talked about it in our community. Basically, how does it work? What does it entail? Is it denominated in dollars? What is it like if it is in Europe, if it is in Africa, if it is in China, if it is in other countries? So basically, a euro bond as well, it's a fund that is invested in the euro, that is invested. That's basically what a euro bond is. It's also like a fund, right? And it depends on the kind of funds that is being invested in. It also depends from market to market. It's usually denominated in US dollars. So these are some of the things that we have here. So we're talking about ETF, we're talking about mutual fund, we're talking about euro bond, there's cryptocurrency, there's forex, there are many other things, right? So we can go on and on counting all the different things that that's a person. So yeah, next, why should I invest in US stocks? Number one is currency depreciation. We did a research, right? And we were looking at a research. Basically, what we were looking at a research was how will the market fare, right? So stay with me. In 1990, the naira to the dollar was 7 naira 90 kobo, right? And this year, it depends on who you're asking. Some people will say it's 380. That is official numbers. Other people will say it's 450. That is what, or even 480. What is happening in the black markets? Depending on who you are asking, they'll be able to tell you what the naira to the dollar is. But let's even go with the 380 naira. That is the official numbers by the CBN. Guess what? The naira has lost about 13.69% on an annual basis. So just by you minding your business, your money is losing its value because it is denominated in naira. And that, guys, is a problem. It's a very big problem. So how do we solve that? How do we solve that? We solve that by doing what? By actually then hedging ourselves. So we always advise Nigerians to actually have an exposure to the foreign market so that people actually have some listed in dollar, right? It's very imperative just because your money is in naira and it is depreciated. The next one is capital growth. It's really crazy, the insane numbers that these companies grow at. We do not see that kind of crazy growth on some stocks in Nigeria, right? And also I showed you the graph how Nigeria has still not recovered from its 2008 crash. You've seen the US market fully recover. I'm talking about the New York Stock Exchange indices. You've seen that of the NASDAQ indices as well, recovered from its 2000 bubbles. The Nigerian market has still not fully recovered. And it also, remember guys, I'm not demarketing the Nigerian markets. I spoke a lot about GTB, about Zenith. This is not a buy. This is not a buy. This is not a buy. Remember, we're a financial literacy company. We do not tell you go and buy this. We teach you, and then you now use your own sense and say, based on what we've taught, maybe this is what I'm going to do. So some stocks in Nigeria are great for dividend yield, like really amazing double digits kind of return for dividend yield, fantastic cash flow. Also, a lot of people say that the Nigerian market is underpriced, so they're hoping to see higher growth in those numbers in the future. When is it going to happen? We're anticipating it will happen, but we just don't know where. But in terms of dividend yield, some of the shares great, some guys. Next one is diversification. We have a lot of people in our community that will say, oh, you know what, I want to diversify. I want to have some here. I want to have some there. So it depends on people to people, like, having your eggs in different basket, kind of, having different kind of exposure, different kind of exposure. So basically that. So let me check in my chat box what people are saying. So that's it. So when should I start investing in the stock market? Number one, when you have a discretionary income, so that way you have your essentials covered as the rent, food, transportation, electricity, right? Once you have a discretionary income, so you've paid all them, they will never invest in stocks because they do not want to, and their risk appetite is not letting them to. That's also fine, right? And then the next one is adopting a strategy after gaining knowledge. So you can either choose to be a long-term investor or a trader or both. So for a lot of people in our community, many of them have both. So they have some portfolio that they trade with. Some of them have portfolio that they actually invest in on the long run. But based on research, guess what happens, guys? Long term actually wins. So based on research, long term wins. So how do the rich invest? Woo! Money. How do they invest? What we're seeing here is that asset allocation of the super rich is that, guess what, guys? They actually put 14% of their money in global equities and 18% of their money in US equities. So if you're looking at this chart, this pie chart, right, a whooping 32% is invested in the stock market. So if the super wealthy are investing 32% of their asset in the stock market, what's stopping you, right? Remember, guys, this is not a force. I'm just trying to share with you how people have invested in the past, and basically just to show you how they have invested. All right, guys. So what are people saying? We had the same class, I think, about 2 months ago, and it was amazing. It's comprehensive. This is just a teaser. It's comprehensive. It's full. I showed you all the things we'll be talking about in those 2 weeks. Many people say, oh, the stock class opened their eyes and changed their mind about how to invest. It was by Oluwaseun. Ngozi said that I used to be afraid of stock investing. Now I've conquered my shares and I've started investing and made returns. Mary said the stock course has helped me with how to strategize and how to invest. So a lot of people have positive remark about it. So how are you investing, guys? With sufficient knowledge, you should be optimizing information and allocating your investments efficiently. So now the thing is this, right? It's very important that you're asking yourself, if you've already started investing, how should you be doing it? There are better ways, right? It's like people going on a journey. Somebody can spend 24 hours to get there. Another person can spend 10 hours to get there. Another person can spend 3 hours to get there, right? I'm very happy for you to start the journey. So even if you do 24 hours, it's fine as long as you've started. But the next thing is, if I can actually do this thing in a better way, why shouldn't I? And that's why, guys, we're selling to you our personal finance stock market intensive class. Is over the space of 2 weeks. It is comprehensive. We'll be teaching you all you need to know about the stock market. We'll be breaking it down. We have another tutor coming on board as well. So literally, we're locking it down. We'll teach you in detail. Also, the recordings are going to be available to you so that, let's say you were busy, you want to hear it a second time. Many people love to hear things over and over again. So if you want to hear it a second time, you want to hear it a third time, you have the recording. The recording will be yours, and it's very detailed. All right. So for those that sign up to our 2 weeks intensive class, right? You would pay, the real price is actually 75,000, but because we're doing a cut off for this portion, we're actually allowing people to be able to pay now 50,000 naira. It entails 2 weeks of a comprehensive class. You get full access to our community. Our community actually costs 20,000 naira per annum. So because you're paying for this, you get a free access to our community. Also, you get 3 months worth of emails. So I'll be telling you, this is happening, that is happening, da. You'll be informed for the next 3 months, all for 50,000 naira. This is usually valid at 75,000 to 30,000. This is for a detailed 2 weeks comprehensive class. It doesn't comprise of the full year of access to our community. It also does not comprise of the 3 months worth of emails of the stock market. But if you do not pay now, if you have to pay later, it will cost you 50,000. So guys, this is our offering for today, and we cannot wait for us to do the 2 weeks comprehensive class with you. Oh, the remarks have been amazing. We've done it before. We've taught before, and the remarks are amazing, amazing, amazing. So guys, if you want to do it now, we're going to switch on the offers and then, make it available to everyone. Just 1 minute. So just 1 minute. I want to ensure that the offer is available, and then basically that. So guys, if you want to ask me any question, come into the section. Let me know, what did you find about the class? Talk to me. I want to hear from you. Oh, wait, hold on. I want to take a picture of this. Somebody says, thank you so much. It was so insightful. Oh my gosh, how do I get this? Let me quickly take a screenshot of it. So yeah. So people are saying it was amazing. I'm so glad. Shubomi is asking that how long is the offer going to last for? Just give me a minute and I should be able to find when it's going to last. Oh, somebody is saying that the positive vibes and all the knowledge. I'm so excited. Oh, I'm so excited that you guys love it. This is so sweet. I'm so excited. Oh, somebody says most informative webinar. Oh my gosh, I need to quickly grab that. Somebody saying that how do you pay for the offer? 1 minute, guys. 1 minute. Please don't go. I'll take it from you. Please don't go. I'll give you the offer now. Oh, somebody said it was eye-opening. Oh my gosh, please wait. Somebody with your feedback. It's so amazing, guys. Your feedback is so amazing. I'm so happy. Uh so who else is saying anything? Rashid is saying thank you. Okay, Onahi is saying what's the difference between the 30, okay, the 50K one has full access to our community, which costs 20,000 naira. Also 3 months worth of emails of key stock market things. That's basically the key difference. I'm so happy with the feedback, guys. I'm so happy. Let me just keep taking screenshots of it, right? Somebody says, I love it. I was so clued. Guys, you know that we actually love to teach, and this is nothing compared to what you will see in our class, right? This is absolutely nothing. We'll be sharing all of this with you in detail. This is absolutely nothing compared to what we'll teach. Somebody is saying that, please, can we get a recording to the email, to the class? Somebody is saying that I just got the ladder app. I must say it's amazing. Somebody is saying, please, how can I invest in Nigerian stocks? I mean, you can go to a stockbroker in Nigeria. It's very, very easy. So there's Stanbic, there's ARM, there's AfriInvest. There's a lot of many companies that you can actually go to, and get it done. Guys, I can't wait for you guys to come to class. We really, really love to teach. We teach it from the depth of our hearts. As you know, we're one of the best in the markets. Yeah. And it's something that we actually do very well. So please, guys, just, some Angel says you really helped break it down. You're really good at what you do. Oh, guys, I'm so happy with your feedback. But please, guys, buy our offer. We're very happy. We can't wait to have you in class. right? We really, really enjoy what we do, and we cannot wait, to go on that journey with you and, just basically help us, get more and put more information out there. So, yes, guys, we are excited about this. So, yeah. So she's saying that. All right, guys, thank you so much. I'm so grateful, guys. I'm so, so, so grateful. You guys are really amazing. You guys are amazing, amazing, amazing. I'm really, really excited to know that you guys really enjoyed this, and I'm grateful. I'm so grateful. So, guys, please, we'll sending the offer to you guys. The earlier you take note of it, the better. So, thank you so much for saying that my energy is phenomenal and powerful. I'm grateful. Hi guys. So what's gonna happen is that we're gonna send an email to everyone, and so that people that are able to buy will actually make a purchase. I just want to say a huge thank you to you for coming onto our class to be able to take it. We're so grateful that you're able to take it, and we're very, very happy that you actually liked it. So we'll be ending the class now, and we'll be calling it a day. And I'm very, very grateful, guys. Thank you so much. I'm glad that you enjoyed our classes and that it was very insightful. Have a fantastic weekend. Thank you so, so much. Yeah, thank you so much. Thank you, Shubomi. And Shubomi, yes, you can pay in dollars. Just send us an email. We'll be able to help you make payments, guys. We'll send you an email so that way people can make payments and you'll be able to get it done. Right. Thank you, guys. Delima is saying, how can I pay for the offer? You can pay for the offer. We just put the comment into, we put the link into the comments, and then you can actually take it to pay for the offer. Ijoma says, thank you, Oluwatosin. I love your energy and love the way you pass information across. I'm so grateful, Ijoma. That's such a kind thing for you to say. And then Tola is saying that is the webinar recorded? Yes, it's recorded. Let's see. I think Jude says, enjoyed your lecture. I've been preparing for this class for a week. You made it very interesting. I'll partake in your offer. I'm grateful. We're going to send a mail to everybody on how they can pay. And I'm very, very happy for you guys to actually, join us, let's enjoy together. Because see, my argument is this, right? What